Chapter 1 Roadmap. If you do what everybody else does, you will get what everybody else gets. Stephen Richards. Trapped in 401k jail. The idea of financial freedom can seem far away, especially if you're working at a corporate job or in the rat race of your own business. How do you make $10,000 in passive income cash flow per month, much less $25,000 or $50,000 per month? That's money coming in to buy you the perpetual lifestyle you imagine without you even working. As professionals, we're sold the dream that our retirement plans will lead to financial nirvana when we eventually retire in our 60s. We've given the illusion that traditional investments are the safest way to grow wealth because that's what everybody else does. However, if we stop and reflect, we realize that many of us don't even know what our retirement plans are invested in. And if we backwards calculate the retirement benefits that we earn for those annual contributions, we see that the pension or retirement plan grew at a paltry low single digit. Most of our clients with high incomes pay at least 25 to 37% in taxes. And they have been taught that the only way to lower this is to put money away in a deferred tax 401k or to pay a higher tax rate in the future upon withdrawal. We're told the lie that alternative investments, such as real estate, are dangerous and unpredictable paths to wealth. We're told that if we want to invest in real estate, owning our own home and buying into real estate investment trusts or REITs with low returns and high overhead is the way to go. Why? We've been told these corporate lies about retirement savings because Wall Street benefits from you keeping the status quo and not questioning their investment products and in sales teams. They make money regardless of whether the market is up or down, whether you make a return or not. There are also the middlemen skimming your deposits through hidden fee structures that are not reported in expense ratios. If you have a financial advisor, they're getting part of the action too. They aren't wasting their time with you for free. If someone said you could invest in something giving you 6 to 8% average annual returns, but at any point you could lose 20%, would you be down for that? No. Seems like the obvious answer, but that's your average American's 401k or professionally managed portfolio. You may have tried on your own, but ETFs or exchange traded funds, indexes, stocks, and bonds are volatile. Forex trading is scary. Cryptocurrencies are even more risky, and commodities such as gold don't offer you the yields you need. When you analyze the path of the wealthiest individuals, real estate investments, not including the residents, and direct ownership businesses are a big part of their portfolio. Why? Real estate is essentially owning a business that offers the advantages of cash flow, income, tax shelters, depreciation, and appreciation. Plus, if you optimize good debt, real estate can give you infinite returns and a cash flowing asset for generations to come. Maybe you've wanted to get into real estate, but as a working professional or entrepreneur, the thought of managing rentals or even vacation homes seem like too much work. Getting a real estate license to be an agent might save you some commission costs, but it's essentially another job that trades time for money. And you already have a highly compensated job as it is. Yep, we've been all taught these lies, including me as an ex-engineer. What if I could go directly into real estate investing without the headaches of managing a construction crew or unreliable tenants, without the headaches of babysitting your property manager, having debt in your own personal name, and risking legal liability? And what if you could seek out investments in the best emerging markets that are outside your home location? Why real estate? Real estate is a finite asset class that provides actual utility to the communities where you invest. While the economy and your traditional investment portfolio comes and goes, real estate holds its value. It is essentially a diversified commodity. Think about the land, lumber, steel, and other raw materials that as a whole produce a diversified stream of income from renters. As the saying, leave the world a little bit better place than you found it, goes real estate investing. Lets you put your money to work on improving communities. Wealth comes to those who create value, in our case, to rehab or build rental units. This mindset is in contrast to traders who buy low and sell high, adding no value to the system. The best investments are frankly boring. They're stable because they're predictable. They're neither shiny nor sexy. They return time after time, month after month. They will serve you far than any other investment as long as you understand the system. The wealth elevator moves past small, single family homes and the local real estate flipper crowd. It focuses on reliable commercial assets and investment grade assets that work well for high net worth professionals like most of those in our wealth elevator community. Plus, real estate offers unparalleled tax benefits. The politicians who wrote tax laws were ultra rich landlords, so it pays to play by their rules and get on their side. The majority of my personal net worth is in real estate for the tax benefits. We will go more into detail about this tax benefits later on in the book. The Wealth Elevator of Investing. With the Wealth Elevator, you have the opportunity to bypass traditional retirement strategies and instead use the alternative wealth building strategies to go straight to financial freedom in as little as 4 years. The Wealth Elevator system gives you an overall framework, clear, actionable strategy for each floor, and an overall proven path for reaching financial freedom. It's how professionals like you fast track to become first generation millionaires and ultimately setting your whole family up for generations to come. Each stage of reaching that freedom is like riding the elevator of a building where you can systematically ascend from the bottom to the top. When you're in the basement, you can't see beyond the walls. You are financially broke. As you start to gain more traction and go up the elevator, you start to see better views and more cash flow. You learn to invest in rentals, syndications, real estate funds. You learn to cut taxes and earn interest on your own money. When you reach the higher levels, you will start to feel the increased acceleration and financial freedom. By the penthouse, a level that most people never get to or even learn about. Any path is open to you. Yes, it's like you are riding in the glass elevator in Willy Wonka's chocolate factory. At the end of the movie there, your wealth can go anywhere. If your net worth is already high, you can get into the elevator and head right to the penthouse. This means earning passive income of typically $25,000 a month, $300,000 a year, in addition to your regular salary. That is, if you choose to continue working. If you're still building, you can start with $0 to $5,000 in monthly cash flow. Elevator overview. For a quick reference, high-level overview of the floors and approximate net worth income levels, see Chapter 2 or check out the resources at thewealthelevator.com/book resources. No space between book resources. And if you guessed it, yep, it's a table because I'm an engineer and boy, do we like our tables and charts. That's just the way we speak. The problem with traditional financial advice is that the strategy changes based on where you are at on your financial journey. But the advice givers don't ask where you are starting. This is the basis of the wealth elevator. My system acknowledges different paradigms for different investors in different financial situations. Each floor offers a new strategy for increasing your net worth, paying less tax, and earning passive income cash flow. Handing over the keys. I'm ready to send the wealth elevator back down to you because I wrote it myself on an unexpected journey from engineer to billionaire real estate operator. I was born and raised in Hawaii by middle-class parents. My mom was a teacher, my dad pushed paper and needed a doctorate degree to qualify for the career he was in. Basically, I don't really know what he did. Collectively, they made a good living for themselves, but nothing crazy. In 2007, I graduated engineering school and landed my first job at a Fortune 100 transportation company in Seattle. As a young frontline supervisor, I managed crews and traveled to rural areas within the country for my projects. But my real focus was on my own personal finances. As I rented out my home in Seattle, which I had purchased in 2009, I got hooked on cash flow and started buying more rental properties with stronger cash flow in Indiana, Georgia, Pennsylvania, and Alabama. About 8 years into my engineering job, I felt a sense of discontent. It had been growing since my very first day at the job, and it had gotten worse since I found this source of rental cash flow, or easy money. It wasn't just about money though. The corporate culture of upper management, disregarding workers and treating customers with a cavalier attitude rubbed me the wrong way, especially as I was the frontline officer who had to deal with the fallout from my team. Things gradually built up until the day that one of my past employees unexpectedly died from a workplace accident. In the aftermath, the whole company and my immediate management team was business as usual. Shaken, I asked myself, what am I doing here? Everyone here is just for their paychecks and their scorecards to get their annual bonuses. The employee who had died was like me, only in his late 20s, and he had spent most of his adult life living on the road away from his young family, given his time and energy to the company. For what? I wondered. By 2016, I owned 11 rental properties, making a few $1,000s in monthly cash flow. The rental income, a lot of it tax-free because of real estate depreciation, was like a third additional paycheck a month. By then, my discontent was clear to my supervisors, and I was put on a performance improvement plan. Did you guys know? PIP, which is basically the corporate doghouse. I decided to focus on what really mattered, not my company's agenda, but my own. I plan to acquire more investments and to never have to work for anyone again. It's funny, reflecting back on that now, I haven't lost that yearning for freedom. I still have it as a personal and family value, and that longing propels me to invest more. Not to rid myself of a day job, but to acquire net worth that means I no longer have to deal with banks. The rental properties gave me choices. They gave me extra cash flow and allowed me to cut my tax bill, which further increased my portfolio because I could plow all my savings into additional rentals. As I acquired more investments, my motivation increased. I became even more determined to work harder at a job I didn't like and to tighten my personal expenses even more to save more money so I could invest my savings into more real estate deals. As my cash flow increased, it seemed like I was on the fast path to financial freedom. I switched to a job that afforded me better quality of life for slightly less salary, one that let me cruise a lot more. That's right, I started to work for the government. Now, working fewer hours and having less politics to deal with, I could focus more on having a life and growing my real estate portfolio. Interesting enough, being less stressed allowed me to get even leaner on my personal expenses, since I wasn't spending my money to alleviate the stress that the job brought about. But at 11 rental properties, my growth was impeded. The mortgage lending programs offered by the Federal Housing Administration, Fannie Mae and Freddie Mac, allowed loans to individuals for only up to 10 properties. I had maxed out on those loan products. And as a single guy at the time, I just didn't really want to get married just to get another 10 loans. That doesn't make any sense. More importantly, running rental properties, even with a property manager, was starting to become a job in itself, and it wasn't even doing any high risk remote rehabbing. As I explored new ways to invest in real estate, I stumbled upon other accredited investors who had a method to be free from managing tenants, create more predictable income, gain access to increased diversification from a geographical standpoint, and unlock the benefits of forced appreciation without having to deal with contractors directly. Syndications. This allowed me to invest with a larger group into entire buildings such as apartments, office buildings, and other asset classes. Groups of investors in large projects are often called a hui, pronounced hui. The historical term comes from a community or village, working together and pooling everybody's money to go after better buildings, businesses, or land. And if you get a sense from the way I talk and the way we do things within our ecosystem, you can see how I have this sense of community, maybe because I'm from Hawaii and we look out for each other. Or maybe it's some people would say it's the whole concept of you better not be a jerk to anybody because you're going to have to be stuck on an island with each other. But whatever it is, I brought that whole value into our community that we have today. And we obviously want to welcome a lot of you guys along on that. Move up the elevator. I paid my dues as a syndication investor with countless of these online courses and expensive mastermind groups to start building my peer network. Private real estate deals and syndications operate much like a private country club, where it's who you know and who knows you. My biggest lesson learned were through a few corrupt business people, including one who swindled me out of $40,000 in a bad deal. I started as a passive investor, also called a limited partner, or LP for short, and eventually led my own syndication deal as a general partner, GP. When I realized how difficult it is to find good, reliable operators to invest with. As a GP, I had a handful of great exits where I more than doubled investors' money, not in the full 5-year pro forma, but in half the time. Doubling $100,000 to $200,000 in 3 years is a heck of a lot of cash flow a month. $100,000 divided by 36 months is $2,777 every month. That's way better than a few turnkey rentals with the same $100,000 equity investment, providing at best $1,000 every month. I'll stop right there and I wanted to interject something. I talked about my story earlier about I didn't like my job and discontent there. And in the first early stages of investing, I would want to say from 2009 to 2018, my ideal was just to get cash flow. And I think this mirrors a lot of new investors we see coming in where the idea is like they want to replace their income because they want to quit their job, but they also want that satisfaction of seeing this working. Whereas what I started to transition to, and I just was talking about this concept in this last paragraph here, higher net worth investors, people with multiple $1 million net worth, they could care less about the cash flow coming in on a monthly, quarterly, even annual basis. What they're more concerned about is the long term equity growth and the impact to their net worth over time. When you get into the world of alternative investing, you're typically in deals where there's a huge amount of value add, maybe even real estate development, where you're not going to have any cash flow until the asset gets built. So I just wanted to point that out. It was a lesson learned that I had, but it's a very natural progression that I think a lot of investors go through, where again, you're focused on short term cash flow. But then as you mature, you start to realize that long term equity growth and legacy net worth growth for your family is really the major goal. Anyway, back to the book. The concept was proven. I left my engineering job behind to focus 100% on syndicating good deals for my investors. In 2017, I met the love of my life and moved back to Hawaii to build a life together. By then, my website, which was previously called simplepassivecashflow.com, as I mentioned, a lot of you guys wanted cash flow. I did too. Obviously, we've rebranded that to thewealthelevator.com as a lot of you guys, and myself included, matured as our net worths grew and we became more of an accredited investor ecosystem. The YouTube channel and podcast had really taken off at that stage. In 2020, when we crossed the $1 billion mark in real estate owned, life didn't seem much different. Maybe because during the pandemic, people still needed a place to live, while the stock market lost over 30%. By then, I owned my own private family bank and legally paid 0% in taxes, both of which we will go in detail later in this book. In 2022, we had done more than 65 syndications with more than 800 investors investing in at least $50,000 to $100,000 each. Our firm owned over $2.1 billion of real estate, over 10,000 units, and employed key asset managers with decades of industry experience. They had even taken over my role on the operations side. And I'll also add onto here at the point of this recording in 2024, over 45 million of distributions back to our LPs. Investor demand led my company to start a real estate fund and expand to ground-up apartment developments, where we aim to double our investors' equity in each short 3-year project. Our income fund covers a wide range of properties offering double-digit % annual returns. It's true mailbox money. And we've also started specialty funds for specific investors needing augmented tax benefits. Get to retirement sooner. I've empowered our investors to increase their passive income and drastically lower their taxes, thus cutting the timeline to retirement to a third of what it normally takes a typical frugal investor. Now it's your turn. It's now time for me to pass my knowledge on by teaching hardworking professionals like you the wealth elevator system. Most people who are trying to ascend the building are wasting their time going the long, slow way by walking up the stairs. It's the hard way, and it's the way the system has been engineered to have you go. It's how the sheeple are supposed to do it. But by reading this book, you'll be given the cheat codes to the game. Like an elevator, the book is designed to be read in order. You may be tempted to jump ahead to Accredited Investor Banking or taxation best practices, especially if you make over $300,000 a year. Don't do that. Go sequentially through the steps of the system. It's important that you understand the stages, even if you'll be skimming the first few floors of the actual elevator, because you'll see subtle themes develop from one floor to the next. As a side note, I'm big on educating the next generation to take over our wealth, which is why many of our senior members interact with younger members in our ecosystem by bringing their adult children. It would be wise to understand the themes present on each floor to aid the knowledge transfer to the next generation. Or you can just gift this book to them. Personally, I started on floor 1, not the basement, which we'll get to in the next chapter, because I had a good paying engineering job and I happened to grow up in a frugal middle class family. That said, it took me a lot of time to get to $100,000 net worth and then $500,000 net worth. Most importantly, I experienced seeing my bank account go up from $4,000 to $6,000 month after month. I remember that feeling, and today I have gratitude for that. Understanding each floor in the overall system will give you key insights into your own financial strategy. Each chapter topic takes you to the next elevator floor and key investment concepts. The stages of investments in Chapter 2. Learn the overall system to earn cash flow and reach financial independence. See features of each floor, preferred investment vehicles, cash flow ranges, and investment risk debt focus. Rentals in Chapter 3. Invest in different types of rental properties to get started generating cash flow. This is floor 1, becoming a sophisticated investor through the wealth elevator. Most investors over $1 million net worth or incomes over $200,000 a year may leapfrog this step, but it's important to understand some fundamentals of rental property ownership. Syndications in chapters 4 and 5. Join other investors in large properties such as apartment buildings, offices, and shopping centers for greater returns. Floor 2 of the wealth elevator is about expanding your peer group and with other passive investors, and choosing general partners and projects for equity growth and or passive cash flow. Private funds, chapter 6. Earn consistent monthly passive income through private funds focused on a variety of properties. Unlike a real estate investment trust, these private real estate funds offer higher returns because there's no middleman or institutional bloat. On floor 3, you're starting to transform to a focus on preservation of capital over equity growth. Tax strategies in chapter 7 and 8. Making more money through better alternatives is only part of the equation. The other side of my method is paying little to no taxes legally. Financial independence means understanding real estate taxes in order to gain more efficiency with your income. Every floor of the wealth elevator has different tax strategies. And I think this is what really separates the wealth elevator system apart from those other wealth building systems for the masses. If you get a sense, there's a paradigm to each of these floors where the game slightly changes, and especially for taxes. Accredited Investor Banking in Chapter 9. Use whole life insurance configured in a unique way to start your investing journey and help your money grow in multiple places at the same time. Every floor of the wealth elevator has appropriate dosage levels of AIB implementation. Socializing your family office in Chapter 10. You're only as rich as who you know. The higher your floor, the more this concept becomes important. Surrounding yourself with the right peer group is critical to your investing, and staying on top of changing tax strategies. When you ascend to the higher floors, you realize that relationships are the currency of the wealthy. It's more fun when you climb the wealth elevator with others who are aligned on your trajectory. The penthouse, $10 million net worth and beyond, in Chapter 11. Becoming a multi-millionaire means thinking like one. When you reach the penthouse, your strategy begins to change. Continue to grow your family's legacy and enjoy life at the top and relax. Most of your peers will never dream of getting to this level in their lifetime. Finally, the penthouse and rooftop tax strategies in Chapter 11. When you move beyond $10 million net worth, you're investing at an institutional level. The rooftop. Yes, it is possible to reach this level, even as a first-generation millionaire. At this stage, your investment and tax strategies go on the defense, so you continue to pay $0 in taxes and leave a legacy for future generations. Gift resources. This is the free stuff, guys. To give you a jump start, I offer you a free consultation to apply the strategies in this book to your personal situation. Join our community via the form at thewealthelevator.com/club. As you move through each level of the wealth elevator, I offer free gift resources to support your journey. When you read each chapter, you will see specific tools, charts, and online courses you can download to empower your growth. You can find a full list of these resources on the Wealth Elevator resources page at the end of the book. Every person or story mentioned in this book is real, and the starting situations for those hardworking professionals are very typical. but some names have been changed for confidentiality. And remember, everything in this book is based on my individual experience and knowledge. Please consult your tax professional and legal professional for the particular situation. I'm certainly not a CPA myself, but I, for one, don't have a day job like they do. After working with us, 95% of our clients end up changing their existing CPA and financial professionals. That can be a personal struggle because our clients typically have good personal relationships with these vendors who are always nice guys. But why would you want financial advice from people who are not financially free and are just salespeople? You're following the advice of somebody who's still working their day job and trading time for money. Stop it. Instead, find what others do that you want to aspire to. That is the same methodology I use to get myself here, and what I continue to do to formulate the best practices for higher wealth elevator floors in the future. If you need help along the way, book a free intro strategy call with me. We'll chat about your specific personal situation, and you can bounce ideas off of me in this free onboarding consult. If that's interesting to you, sign up on our club form, thewealthelevator.com/club. As you read the book, be sure to keep an open mind. You're here to learn how to define your goal, hit it, and chill. There's no reason to aggressively grow your net worth to the point where you cannot spend it all, especially when it's in exchange for life energy and time. The first step is learning what floor you're on now and how to begin your investment journey. Stop taking the crowded stairs and follow me on the wealth elevator. A few notes for those of you guys who are lazy like me and only read books on the audiobook form. You might have missed it by having access to the cool charts and images. Essentially, what the wealth elevator is this construct that there are different floors within this building. The wealth elevator speeds things up. It's the cheat codes. What we're going to be doing next is figuring out which floor of the wealth elevator you are on. And based on that, there's different strategies for what you're investing in, what you're doing for taxes, what you're doing for infinite banking, what you're doing for your overall strategy. So it can be complicated if you're just listening to this. So I would suggest getting access to those book resources and being able to look at the images, or get your hands on the PDF version of this. If you guys want a free copy of this since you've purchased the audiobook, email team@thewealthelevator.com and let us know you're looking for the PDF version.